Hello, everyone. It's 8:02 a.m. Chicago time on Thursday, the 8th of March, 2018. Seventh day of 2.5 hours of sleep every night because of this new baby. So if I'm somewhat incoherent, you'll have to excuse that. I'm very, very cautious when taking trades, trading smaller. Anyway, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is just slightly stronger. The NASDAQ quite a bit stronger, 35 points. I want to remind everyone at the beginning and at the end of the broadcast here that we have rolled officially to June 2018, the M8 contract. The table in front of you here represents, and I tweeted it out in case you missed it, the table in front of you represents the adjustment in prices to close the gap between one contract and the next on continuous contracts. If your software doesn't do this, then maybe you need better software. But no, then you'll have to go back and fix prices. So right now, the premium differential, the premium delta between the June and the March contract as of settlement yesterday on rollover is 5 points. Settlement yesterday was 27.28 and a quarter in June and 27.23 and a quarter in March. And then you have these other contracts here, NQ, YM, EMD, and the Russell. And you'll see these differences. But in any case, today I'm quoting and trading June 2018 starting now. A lot of people do not shift over to the June contract until tomorrow when volume becomes heavier in the June versus March. I don't do that. I roll with the exchange. My data rolls with the exchange with the official time. And so today will be slightly confusing because I will be reviewing the March contract because it was yesterday's work. But I will be making a plan on the June contract, which is what I'm trading today. I want to caution you also that Draghi is still speaking for those of you trading the euro, the Bund, euro stocks, DAX, and so on. As far as what we are expecting going forward, not seeing anything worth talking about this morning. On the calendar. Let's jump right in and take a look at what we expected yesterday. I want to remind you again, this chart here from yesterday represents the March contract. Yesterday's plan, the market opening in a gap, an open auction out of range was expected. Expected the market to test down to around above, but I would stay above 2,700. And then shoot up into the prior day's range, consolidate at 27.15, and ultimately end up at around 27.30. Okay, so that's what this represents. A test of just above 2,700. Tangle 2015, which is the MC point of control. Remember, this is the big price area. And then ultimately get up into 27.30. That stock zone up there. And so that's what we got. I'm only, there are other plans here. I looked at 27.15, push, fail, back into the gap zone, and then start making its trip down to 26.90, which is big. And then ultimately push down to 26, not 24, but 26.75. And then the third plan is to go sideways, put us all to sleep, put in a very tight balance profile, get the initial balance in, and then the energy would dissipate to the upside, and then we would push through and get 27.40, which gives us about 35 points of range. That didn't happen. In any case, this is the plan that happened. Again, now, we're still reviewing, but now we're looking at the June contract. So everything is higher by 5 points. So you see the low here is 27.05, 27.05 and a quarter, which represents 2,700 and a quarter. Again, the adjustment is 5 points. Okay. So that's where we are. That's basically what we did. We tested the lower end down to 2,700. We did have an open test drive open, which I didn't expect. I expected us to chop around, but in any case, we pushed through 27.15. Here's the consolidation at 27.15. So we immediately, instead of consolidating at 2,700, then pushing 27.15, and then pushing through to 27.30, what we did is we had an OTD, open test drive, very nice drive, 15 points, good delta on a drive, approximately 7,000 contracts, more on the buy side than the sell side. Consolidated at 15 just as expected, and then it continues higher and pushes into 27.28, gives us a ride all the way down to the low, incredibly. So we have a range extension up, the IB is broken to the upside, then we push all the way down. We fail to push through the initial bounce low, which is surprising, very rare that it does that. And then we ultimately get to 27.30, which here is 27.35 and a quarter. 27.30 is depicted in the review image from yesterday's primary scenario, is tagged on the close, and now we are back in balance with the prior day's point of control. So we took out the Cohen resignation SOC at 27.24, which is June's 27.29. Kind of sucks to have to repeat different prices, but we'll only be doing that for today. So I took out the indication here, the flex marker, flex level marker for the Cohen resignation as the SOC for the gap down. We took that back, and the market has basically consolidated right where it was. So what we had yesterday is the market basically coming back and taking back the Cohen news and resuming its normal auction. So it essentially, by the time we closed yesterday, we had resumed the prior auction. And then the action we had overnight was basically the action expected in yesterday's Globex session, in Wednesday's Globex session, where we would consolidate through the night and then continue higher. We are on our way up. We continue on our way up as expected. So those are the key things to take away from this. The overnight session, what is it telling us? The overnight session spent a fair amount of time in the European, in the Asian portion, just riding sideways. The European session began, and we push higher and we consolidate. We're finally making this push higher and out of the range. So what we're looking at here is a small gap up in the ES. The Nasdaq has had a pretty decent run already, and we're looking at this likely to be a continuation, the overnight high to be threatened this morning, and for this to go higher. So more of a bear squeeze. The bears must be really used to this. The overnight inventory is decently long. I mean, we did spend a little bit of time below yesterday's close at 27.28 and a quarter, and maybe 70% long or so. The delta, however, look at this delta. Remember, we rolled, so the delta just goes to the crapper. It doesn't give us any indication at all. The delta's flat. So the overnight inventory is expected to be mostly long, and it may balance out on the open, but I expect us to bounce back down and then continue higher. Again, before I get into these scenarios, I want to make sure you remember today is rollover day. Everything I'm quoting is the June contract, and the difference in the ES between a June and a March is +5. The market is in contango. We've been in backwardation as far back as I can remember. I think we've been in backwardation. Don't quote me on this, but we've been in backwardation ever since I switched from trading, from being a SOS bandit trading NASDAQ equities to trading futures back in 2002. I've always seen a negative premium on the next month. And for the last part of last year, we've seen positive premiums. Okay, so the current expectation, let's turn this off. Boom. Current expectations, I expect us to open in an open auction out of range. I expect us to balance the overnight inventory a little bit. This former 2730, which is now 2735.36 stock zone here. This is pretty strong. If I pull this up a little bit, you'll see why the stock zone exists. There. Multiple tests of this area. There. Double test. Right? Another test. Pretty decent area from a pure support resistance perspective, which is what the stock zones are built on. Support resistance, volume profile, as well as some stats in there. Open auction, respond back into 27.35 in a June contract. I look for the impulse higher as we push lower into 27.45. Take out the single print we left behind on the 28th and then continue higher. I expect us to start approaching, I need to fix this level here, to start approaching 27.50, which is the mid-century figure here, a major strike. I want to remind you also that tomorrow's non-farm payrolls. It is a major release every month. The market's not likely to trend too strongly, but I do expect us to keep floating higher today. The better trade today, of course, is for the market to turn down and to sell off a little bit. That would give us better rotations, better opportunities on an intraday basis. So that's that. Remember, non-farm payrolls this tomorrow morning. Otherwise, market opens, pushes higher into the overnight high, gets a response, gets into 27.35, jacks around a little bit, and then dips in. But I expect a very quick dip before it starts to get buyers, and I expect us to finish somewhere in the middle. We're likely to end up with a profile that looks something like this. Okay, I don't expect us to dig too deep. Oops, missed this part. Good taper at the low. I don't expect us to dig too deep. I expect support at 27.26 to hold. If it does push lower, look at it this way. If the market pushes lower, we get an impulse lower, I'm looking for the continuation. I'm going to fade or buy the continuation on a first test. And the area to buy that continuation ideally would be the 27.25 through 27 zone. That's this zone right here. And then I'll be looking for it to turn back up and create that upper distribution. That's my plan for scenario 2. I leave scenarios 3, 4, and 5 for your imagination. I'll cut it short here. I'm out of time. Again, trading June. Okay, trading June starting today. Good luck.